Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at SoundHound AI.
If you find our talks useful, please consider subscribe, like, and comment underneath. And before we really get moving today, if you are looking to step up your market research, the VIP Algos link is below in the description.
Yeah, it's an incredibly helpful tool for tracking these sorts of high-growth setups.
Definitely. So let's talk about the AI space right now, because if you walk into almost any corporate boardroom today and just casually whisper the letters A and I, it is basically like throwing a lit match into a fireworks factory.
Right. It is completely chaotic out there.
Yeah, I mean, suddenly everyone is scrambling. Budgets that were frozen for years are just magically unlocked. You have legacy software companies slapping the AI label on products that are basically just glorified spreadsheets.
Oh, absolutely. The amount of market noise generated by this sector every single day is just deafening. We're living through this massive gold rush, and naturally, every single company with a server claims they are selling the next great pickaxe.
Which is exactly why we're doing today's analysis. We are looking at the enterprise artificial intelligence space by focusing on one very specific, very polarizing player, which is SoundHound AI. For those of you tracking it, the ticker is SOUN.
It is a business that is essentially a walking paradox right now.
Totally. Our mission today is to help you cut through all that chaotic market noise we just talked about. We want to balance some truly extreme contradictions within this company to figure out what is actually going on under the hood.
Because the contradictions here give you serious whiplash.
Yeah, I mean, on one hand, you have staggering top-line numbers. We are talking about 88% organic revenue growth in their core areas. That is astronomical.
Right, but then you flip the page on their financial filings, and you're staring at the harsh reality of negative 91% net margins.
Which is just terrifying. So it's heavily shorted, surrounded by completely divergent analyst opinions. We really need to figure out the wealth-building context here. Is this a falling knife that's going to slice right through your portfolio, or is it a primed rocket just waiting for a spark?
Well, before we even glance at a stock chart or, dive into the fundamentals, we really have to understand the underlying product.
Right.
Because if a company is just wrapping a fancy new user interface around an existing AI model that somebody else built, the financials don't even matter.
Because the business isn't defensible.
Exactly. We need to look at what makes SoundHound fundamentally different from the thousands of other AI startups out there right now.
So looking at the data, their crown jewel is a proprietary technology they call speech-to-meaning. And to understand why that actually matters for wealth building, we have to look at how a standard voice assistant currently works.
Which is usually a two-step process, right?
Yeah, exactly. If you ask your phone or your car to do something, it uses this two-step pipeline. First, it translates your speech into text. It basically acts like a dictation machine.
Right.
Then it takes that text file, hands it over to a natural language processor, and tries to figure out what you actually meant. It feels really clunky.
Well, and that two-step process introduces latency.
Yeah.
It creates an actual physical delay in the computational process.
Which users hate.
Oh, they despise it. And beyond the delay, it also drastically increases the chance of errors. Vital context just gets lost in translation between the audio phase and the language phase.
Because, think about how often a voice assistant mishears one specific word and suddenly the entire command just fails because the text file was wrong.
Exactly.
So to put it in perspective for you listening, imagine you have a human interpreter who translates your words literally, looking them up word by word with a dictionary, and then hands that piece of paper to a second person to figure out your tone, your urgency, and your actual intent.
That sounds exhausting.
It is. That is the standard two-step process. But SoundHound's one-step speech-to-meaning process bypasses that text translation entirely. It is like having a master translator who instantly grasps your intent the second the audio waves leave your mouth. It happens simultaneously.
And what's fascinating here is how that technical advantage actually translates into a defensive mode against competitors. They aren't just relying on a slick algorithm that someone else could reverse engineer.
Right, they have lawyers.
Oh, lots of them. They have wrapped this core architecture in heavy armor. They currently hold 359 granted patents.
Wow.
Yeah, with another 102 pending. In the enterprise tech world, that is a formidable minefield for any competitor to navigate.
So if another company wants to build a single-step audio-to-intent engine, they're going to bump into SoundHound's intellectual property at almost every single turn.
Exactly. And they also have this architecture called Collective AI, which is a library spanning over 100 different domains. The AI understands context dynamically, whether you're asking about, baseball scores, the weather, or booking a table at a restaurant.
But the piece I find most compelling for their actual business model is their white label approach. They allow major enterprise customers to use this incredibly smart AI engine, but the customer gets to keep their own branding and, crucially, their own data.
That is a massive selling point in the corporate world right now. Let's look at a hypothetical scenario with a major car manufacturer.
Yep.
If, say, Ford or Hyundai decides to just use a big tech giant's voice assistant in their dashboards, that tech giant is suddenly siphoning up all the driver data.
Right. They know where the driver goes, what they listen to when they buy coffee.
Exactly. The car company loses that gold mine of behavioral data. But SoundHound goes to those enterprise clients and says, hey, keep your data, keep your brand identity, just pay us to use our engine.
Which creates incredibly high switching costs once they are deeply integrated into a vehicle software ecosystem.
Exactly.
But, I mean, a patent wall and a white label model sound great in theory, but I really have to push back here. Is that really enough to survive an AI landscape dominated by massive trillion-dollar tech giants?
It's a fair question.
I mean, we are talking about companies with virtually unlimited resources, right? Companies that can afford to take billions of dollars in losses for years just to capture market share and starve out smaller competitors like SoundHound.
Surviving the massive capital advantage of big tech is really the defining question of their existence. But the real-world traction they're currently getting suggests their moat is holding up remarkably well.
So let's look at the top-line revenue growth then, because it has been explosive.
It really has. In the first quarter of 2026, they posted revenues of $44.2 million. That is a 52% increase year over year.
You do have to wonder, though, how much of that 52% is just them buying up other smaller companies to pad their stats? Because, acquisitions can sometimes mask a struggling core business.
That's true, but if you strip out those acquisitions and look purely at their core automotive and IoT sectors, the organic growth is actually 88%.
And just to clarify for everyone listening, IoT stands for the Internet of Things. That refers to embedding software and sensors into everyday objects, like smart kitchen appliances, drive-through kiosks, smart TVs.
Right. And achieving 88% organic growth means major brands are actively choosing SoundHound's architecture over the big tech alternatives, and they're paying a premium for it. The master translator is actively getting hired.
So the top-line hype is undeniably real. They have built a superior mousetrap, they are selling the product, and revenues are surging. But that brings us to the fundamentals regarding their financial tightrope.
Yeah, this is where it gets tough.
Massive revenue growth is an amazing headline, but we have to look at how much cash it is costing them to achieve that growth. Let's shift from the top-line excitement to the bottom-line reality, because this is where the story gets pretty terrifying for investors.
The profitability issue is the massive elephant in the room here. SoundHound is currently operating with a trailing 12-month net margin of negative 91.84%.
Just to make sure that really sinks in for everyone, negative 91%.
Yeah.
That means for every single dollar they bring in the front door in revenue, they're essentially spending nearly another full dollar just to keep the lights on, train their models, and pay their engineers.
They are nowhere close to turning a profit.
Not even close. And the pure cash burn numbers reflect that harsh reality. In fiscal year 2025, their operating cash burn was negative $98.22 million.
And in just the first quarter of 2026 alone, they burned through negative $26.26 million.
That is just such an aggressive burn rate.
It is. But I mean, training AI models,
Mm-hmm.
securing massive amounts of cloud computing power, hiring top-tier machine learning engineers, all of that requires a staggering amount of capital.
You cannot sustain losing nearly $300,000 a day forever without a very strong safety net.
Right. But the safety net is actually the weirdest part of this whole financial setup.
It really is. When you first look at the company, it looks exactly like a rocket ship burning fuel at a terrifying rate. You expect them to be on the verge of bankruptcy.
But then you look closer at the balance sheet.
Yeah, and you realize they have this massive auxiliary fuel tank strapped to the side. They have a fortress-like balance sheet sitting on $216 million in pure cash.
And even more surprisingly, they have zero debt.
Zero, which is wild. They haven't taken out any massive corporate loans to fund this rapid expansion.
And operating with zero debt in a high interest rate environment is a superpower. It gives management optionality that distressed, leveraged companies simply do not have.
Because they don't have millions of dollars flying out the door every month just to service interest payments to a bank.
Exactly. But they still have to manage that cash runway carefully, which explains their recent capital raising move. On May 27th, they filed for a $300 million at-the-market stock offering.
For the listener who might not trade the markets every day, an at-the-market or ATM offering is a very specific mechanism. It essentially allows the company to slowly create and sell new shares into the open market to raise capital opportunistically.
Right, which does dilute the value of the shares currently held by existing investors.
It does, yeah. But it brings fresh cash into the business without taking on that toxic debt we just talked about.
This raises an important question, though. If they are actively diluting shareholders with a $300 million offering and burning through $26 million a quarter, has the market already punished them for this?
Has this reality already been priced into the stock?
Well, the stock has dropped significantly this year, implying that a lot of this dilution and cash burn risk is already known by institutional investors. Management is using that fresh capital to heavily reinvest in their OASYS platform.
Let's pause on OASYS for a second because the filings mention this is their agentic AI platform. We really need to clarify what makes an AI agentic compared to the normal voice assistant we've been discussing.
Okay, so a standard voice assistant retrieves information. You ask for the weather, it tells you the weather.
Right.
Agentic AI, which is what the OASYS platform represents, actually takes autonomous actions on your behalf across different applications.
Yeah, wow.
Yeah, so instead of just telling you the price of a flight, an agentic AI navigates the airline website, inputs your payment information, and books the flight for you.
That's incredible, but building that level of autonomous capability requires immense capital, which is where the $300 million ATM offering comes in.
Exactly.
So knowing they're burning cash to build this agentic future, the natural question is how do they actually plan to scale out of this financial hole and reach profitability?
Well, they are doing some cost cutting, consolidating server infrastructure, optimizing cloud spending, and replacing expensive third-party tech with their own proprietary models to bring internal costs down.
But you can't just cut your way to massive growth. You have to expand.
Right. And the answer to that expansion lies in a massive upcoming catalyst. They are placing a very big bet.
A $100 million bet. SoundHound is expected to close the acquisition of a company called LivePerson in the second half of 2026. This is a highly transformative catalyst for the business.
And it is entirely reshaping management's forward financial guidance.
The guidance they are putting out is incredibly bold. They reaffirmed their standalone fiscal year 2026 revenue guidance of $225 million to $260 million.
But post-acquisition, looking ahead to 2027, they project a combined revenue opportunity of $350 million to $400 million.
And they are sketching out a long-term path to a massive $500 million revenue base.
Which is huge, because hitting $500 million in revenue completely changes the math on those negative margins we discussed earlier.
Because software and AI models have massive operating leverage, right?
Exactly. Once the core engine is built, the cost of adding the 10,000th customer is virtually zero. At $500 million in revenue, the pure profit starts dropping straight to the bottom line.
But there is a glaring bear case here regarding how they plan to reach that scale. LivePerson is widely known in the industry for targeting distressed companies.
Yeah, this is where the risk really ramps up.
Because I really have to challenge this entire acquisition strategy.
Yeah.
You have a company in SoundHound that is already burning $26 million a quarter, fighting an uphill battle on margins, and trying to manage its own cash.
I know, right.
Isn't buying a company that targets distressed assets for $100 million incredibly dangerous? That introduces severe integration risk.
Oh, absolutely.
You are essentially taking a complicated, possibly messy business with unhappy clients and grafting it onto your own cash-burning engine. Merging corporate cultures, untangling legacy tech debt, stabilizing a frustrated client base that could drag SoundHound down entirely.
Taking on a distressed asset is an aggressive gamble, and that integration risk is the primary reason some conservative analysts are presenting a bear case right now. If the platform breaks during the merger, those clients will leave. But management's strategy here isn't just about adding top-line vanity metrics to make the company look bigger. They are actively targeting LivePerson's deeply integrated enterprise customer relationships.
So they aren't buying the company for its tech, they're buying the company for its address book.
Yes, exactly. Because building enterprise sales pipelines from scratch takes years of meetings, pilots, and negotiations. LivePerson already has those contracts in place.
So SoundHound is buying access to a massive portfolio of enterprise clients.
Right. The entire strategy revolves around cross-selling. They plan to walk into a LivePerson client's office, say a major airline or a bank, and say, hey, you already use LivePerson for your customer service chat. Let us upgrade your entire phone system with SoundHound's superior speech-to-meaning voice AI.
The argument for management is that the projected cross-selling synergies are so massive, and the upside of getting those clients onto SoundHound's core tech is so large that it provides a very wide margin of safety to absorb a few missteps during the messy integration process.
That's the bet they're making.
So we've established the underlying fundamentals, we see the bleeding on the financial statements, and we understand the intense risks of this LivePerson catalyst. The ultimate question is, how is Wall Street actually treating the technicals of this stock right now?
The sentiment out there is totally bifurcated.
Let's look at the pure price action first. The stock is currently trading near $6.96. It appears to be forming a solid base right near its 52-week low, which was $5.83.
To put that technical setup in context, the stock is down roughly 30% year-to-date, and it is sitting nearly 68% below its 52-week high of $22.17.
It has been severely punished by the market. I mean, the valuation's been cut by 2/3.
It is also a highly volatile asset, registering a beta of 2.81.
For you listening, a stock's beta measures how much it moves relative to the broader market. A beta of 1 means a stock moves exactly in sync with the market.
Right, so a beta of 2.81 means if the overall market sneezes, SoundHound catches a cold. But if the AI sector goes on a sprint, SoundHound basically teleports. It moves violently with any sector rotation.
And the trading volume on the stock is currently contracting, sitting at about 0.92 times its normal average.
In technical analysis, volume contraction often happens when a stock is trying to find a definitive bottom.
Right.
The sellers are exhausted and have basically finished dumping their shares, but the new buyers haven't fully committed yet.
Which perfectly reflects the wildly split sentiment we are seeing in the financial news right now. You have high-profile retail figures like Jim Cramer recently going on television and explicitly saying he is passing on the stock.
Yeah, and it is incredibly heavily shorted by hedge funds. Some lists have it flagged as a literal powder keg primed for a monster short squeeze.
But then, on the exact opposite side of the spectrum, institutional analysts at Cantor Fitzgerald just reiterated a buy rating with a $15 price target.
Right, and the overall Wall Street consensus target is $14. That implies a massive 100% upside from where it sits today.
The divergence between retail commentators calling it a pass and institutional analysts projecting massive upside is striking. But the single most compelling data point regarding sentiment is the bullish divergence occurring internally at the company.
Yeah, our data reveals incredibly powerful insider cluster buying.
This is the specific data point that makes you sit up and pay attention. Over the last 90 days, insiders at the company, the executives who actually see the accounting books, the people who know exactly how the LivePerson integration is going, have bought 62,082 shares of their own company's stock across 3 separate transactions.
And during that same 90-day window, 0 sells. Not a single executive or board member is jumping ship.
Which gives the stock an insider sentiment score of 100. So what does this all mean for the final verdict? How do you reconcile this split reality for the listener? We have retail pundits saying no, we have massive short interest betting the company will fail, but we also have Wall Street targets implying the stock could double in price, and the executives inside the building are buying the dip with their own cash.
Well, if we connect this to the bigger picture, we are looking at a highly volatile, highly asymmetrical market setup. You have a high beta, which means the stock is mathematically primed to move fast.
Right.
You have the high short interest, which creates the powder keg. For those unfamiliar, a short squeeze happens when people who borrowed shares to bet against the company are suddenly forced to buy those shares back to cover their losing positions because the price is rising.
And that forced buying drives the price up even faster in a massive feedback loop.
Exactly. Add in broader macro factors like the Federal Reserve potentially cutting interest rates, which traditionally drives capital back into high-growth, cash-burning tech stocks, and you have all the dry powder needed for an explosion.
So the macro environment is the powder, and the insider buying is the match.
When insiders are cluster buying at multi-year lows, they are signaling extreme confidence to the market that the asset is deeply mispriced. Any positive piece of news could act as the catalyst to trigger that massive short squeeze.
For example, their upcoming Q2 earnings report in August. The market will be watching their EBITDA closely.
Yeah, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is a way to look at whether the core operational business is moving toward profitability before all the complex accounting factors are applied.
If SoundHound can show narrowing EBITDA losses, proving their core business is stabilizing while maintaining that 88% organic growth, that might be all the proof required to force the shorts to panic, cover their positions, and send the stock rocketing upward.
It is the absolute definition of a high-stakes scenario.
Which brings us to our final verdict for today's show. Based on the technology, the financial realities, and the market sentiment we've analyzed, SoundHound AI gets a bullish score of 7 out of 10.
It earns that 7 because the core technology is undeniable and the stock is deeply oversold. However, it is fundamentally a high-risk, high-reward swing trade with a very specific 3 to 6 month horizon.
You are looking squarely at the live person acquisition closing process and those upcoming Q2 earnings as the binary events that will dictate the company's long-term future. Obviously, understand the upside and downside clearly before making your own move.
For sure. They have built something undeniably powerful with their single-step speech-to-meaning technology. The master translator works. But they are racing against the clock to integrate their new acquisitions and scale their revenue before the cash reserves run completely dry.
Which leaves us with one final thought to mull over for you listening. We spent a lot of time today talking about their master translator, that one-step technology that instantly, seamlessly, and flawlessly understands human intent without any processing delay or textual translation.
Right.
If SoundHound wins this race, if this specific technology becomes the default architecture for all our cars, our kitchen appliances, our televisions, every single device around us,
We are looking at a world where our immediate environment is always listening and instantly comprehending everything we say, without hesitation.
right. And if the world around us no longer requires a translation step, if there is no longer a physical delay between our speech and a machine's understanding of our exact intent, how might that perfectly frictionless understanding change our fundamental relationship with privacy?
That's a great point.
More importantly, how might it change our relationship with silence in our own homes? When the master translator is always in the room, seamlessly parsing our every word and tone, what happens to the things we simply want to leave unsaid?
Definitely something to think about.
Well, if you found today's breakdown valuable, please make sure to subscribe, like, and leave a comment below. And again, do not forget to check out that VIP Algos link below in the description if you want to upgrade your daily market setups. Thanks for hanging out with us, and we will see you next time.